Post-market wrap, taking a look at the action today. The SPY, it had a rose from the lows this morning, had a gap down, but it definitely did not close above the 20 moving average, which is a bad sign. And we know that the data was not good today, but in terms of the chart itself, did not close above the 20, which is a bad sign. We were already 2 closes below the exponential moving average, 2 consecutive closes, which is always a sign that we are trending lower. And definitely today was one of those days. Now I could see us going down to try and try to close the gap, really. I mean, that would be the best, one of the best areas. And if not, I mean, this is not a gap here. The gap was on this candle. So that's already pretty much been filled. I want to say pretty much because it still had some missing. So you can bounce one day at that level, but I don't think that you're gonna survive as resistance there, as support there, because it's already kind of been tested a couple times. So that's really for the SPY. QQQ. QQQ did manage to close above the simple moving average, but it did not make it above the exponential. Same with the 2 days to close below the exponential, and confirming that we're in another downtrend until we reverse that. Same behavior, has the gaps down here. In this case, it's already been, the window's already been tested, so now it's all about the fill. You want to wait for that fill. And the 50 moving average, it was the first time that it tested that in quite some time, since April. So 2 months, 3 months that it had not tested that level, and it didn't make it. So now the DJX, same thing. DJX even had a smaller, didn't have as much support, I guess, but it had a little small candle ending for the day. So the only thing that can, not even this one, same gap fill, all of that. So we've been following this one with the Fibonacci, and we're at the 38.2 from the highs. So we're going down to retest that level, but since we have the gap fill, we get a bounce from that level one more time. See what we can do with that. All right. So there are some stocks that were affected in terms of becoming bearish. So bearish by way of pattern, by way of closing. That's the measurement. So as you can see, some energy, some materials, industrials, consumer discretionary, healthcare, financials, IT, communication services, utilities, and real estate. There's quite a bit of sectors in here today, but sometimes it's only 3 that okay, only 3 sectors were affected today. But I do want you to notice that in terms of the energy plays that for the daily chart had a bearish close. Is for example, this one stayed above the 200 simple moving average, which is the yellow line, but it closed below the exponential moving average. This one, same, closed below the exponential moving average, closed below the simple moving average of the 20. So they were supported though from the low, right? Supported from the low. Supported from the low. So closed Even though they closed down or negative, that one's probably the first one that was not supported from the low. I think that one will go to tag the 200 moving average, which would be great. It has a lot of gaps down here that it can fill. That's Valero. Yeah, it's gonna have some great bounces here. So it even has this gap that it has to fill, but I'm gonna just stick with the lower one. They're too close together for me to try to grab them both or play them both. Same with this one. I'd just rather wait for the lower one. This is the only one that, just because it's closer to the 200, and if you get them both at the same time, that's like a double support, so you get a nice stronger bounce out of it. And when you jump down to, supported from the low, not supported from the low, but Dow Chemical, I mean, that's a nice low there, right? I said it turned bearish, but that bearish could be the low, right? Doesn't mean it's gonna continue lower. It's in a bearish technical state, I guess you can say. But this one looks like one that could be the low. Showed up in the bearish. Today was a bearish move, but it might be the last bearish move of that chart for some time. Tons of gaps. That's what sucks about right now. Gaps are like everywhere. Supported from the low. Supported from the low, right? So that's energy and materials. Energy and materials, we know those are part of inflation right now. Industrials are more affected by inflation. So those, you can see, they're not supported from the low. That one looks like a good one, actually. Looks like one that it was expected to close above that 50 where it peaked out, but since it didn't, that was considered a bearish move, considering that this was a pattern that should have broke out today. Supported from the low. So that's the difference in these. A lot of these is where they close. They close below the averages, didn't make it, or you were supported from the low at the least, like Uber. You're supported from the low. So also the same, another thing to notice about these that were supported from the low is that a lot of them are in limbo. What I mean by that is that they do have signs of a possible breakout or are close to a breakdown, right? So if you were to look at momentum, it's more closer to a breakdown than a breakout, but the race is pretty tight. And then if you look at the RSI, it's closer to a breakout than a breakdown, but the race is pretty tight as well. So it could do either way, except the actual close. The actual close was bearish for the chart because it showed a little more strength. For example, this should have broke out today, right? That would have been nice. I know it was a bad day, but the chart said, people were buying it up. All right, so let's move on. Tesla, this was a bearish close. It's right at the EMA. So they closed at 711.12 and the EMA is at 710.49. So it just like right $1 right up there. The bearish is probably, let's see, just to be exact on Tesla. Yeah, I mean, it's this bear wedge that it has here is pretty much what it's trying to survive. Right, this bearish right there. It's trying to survive that. It's like today you even opened below and were lucky enough to be bought up. So it has a bear flag, a bearish wedge, whatever you want to call it. And we'll see what it does. But it definitely was in our bearish close, not good for the chart area. Peloton, same, but could be the last, last bearish move for some type of climb. Same, it's losing its momentum, but it also has a chance of, breaking out. So it's close. I should say waking up, not breaking out. So anyways, all of these are turned bearish just due to the close, mostly due to the close. It's just that some of these could be the last day that it made that bearish move, and then tomorrow and Monday they're up, and you're like, oh, I thought you said they were bearish. Well, it's the close that was bearish for the chart, but the possibility of that being the last day, that's a whole different story. All right, let's look at some of the bullish ones. Also, I do want to note that there's a lot of SPXL, TQQQ, UDAO. Those are all ETFs that are SPY, XLF. All these are ETFs that represent a group of symbols, and they all look bearish. TBT. Yeah, TBT closed bearish for sure. Time to have a lot of gaps. That's going to save it, but it's time to head down. Wowzers. Okay. Meta didn't make it, but Meta still can break out, given that it had a strong week last week. So we're still within that strength and can definitely still go for that. Okay, let's look at some bullish charts. So the bullish sectors, as you can see, it's not even a lot, right? It's a couple energy, materials, healthcare. Very few stocks. Everything is all money went into ETFs for bearishness. So all of these are all ETFs, SDAO. They're all inverse ETFs. So you can see that all of these are on the list of. Let's just take a look at QID, which is a popular one. Even though QID was down from the open, it still managed to close above the exponential moving average of the 5-day. And that still leaves it in a bullish position. That was a bullish move. 2 closes above the EMA, survival the next day. We're pretty much back on to being bullish here. All right, and SPY. We went over the SPY already, so let me look for another one. Same. These are not bad patterns. So let's go through some of this energy. CNX, went up, try to retest this moving average. This one made it above the moving average, so it's going to go and try to hit that next one, which would be the highs as well. Same, made a climb. So this is a yeah, made it above all the moving averages. So that's today's move for that. I don't even know what company that is. One Gold, Anglo Gold, up for 4.21%, but found its low, and now ready to try to do this again, attack the moving averages. And if it can make it, we're back to 1688, which would be the first time that we touch it. So don't think that we're going to get through it really easily. But gold is a talking, so keep an eye on your gold stocks. Alright, so this one, another metals and mining, and definitely must have found the low here and is now ready to go and attack the moving averages, which it has not touched in a while, so it's gonna have trouble with them. Plus they're downsloping really sharply. Hotels, Hilton seemed to find some strength there. This one has remained above the 200 since it gapped up above it, and probably ready to go higher. Definitely not going to be dropping below that 200 according to its current price there. Okay, let's see. I mean, everything else is probably very similar. A close, bullish close. So this one is probably found its low here, set up for a pattern, and is ready to try to go up again. You know, same here. You would say that this is a bearish candle reversal, right? But we've seemed to hang on there. So it's like, all right, I thought we reversed because we have seemed to have hung on to this V pattern here, which is strength. Like to go all the way down and go all the way up, that is strength. Dale, so this is a bearish pattern, you can say it is, but what's happened is you've been able to hang on. It's like, why are you not dropping lower? So then today you make the first move of your bullish attempt to try and attack at least the red bar high, the red bar that you are last fell under, which also can match some of the moving averages. Okay, I mean, it looks like we did have a significant day today, and you know, a lot of the bearish ETFs went bullish, and a lot of stocks went bearish. And last but not least, I do want to show oil, because we did talk about a lot of energy. So oil hit the 200 daily simple moving average. It does have a gap fill at $90, so $90 will be a great level to grab a nice futures bounce, and possibly I don't want to say the last bounce, but let's check out the weekly charts. Nah, we could probably go all the way down to hit the 20 simple moving average, but I don't know that that's now. If we close the month above the exponential moving average of the 5-day, that is super strength, and that can happen off of the that can happen off of that $90 level. Not like it can't. And we can continue to go higher. Oil slated to go higher for a good amount of while. So, we could have another one of these. Okay. The RSI doesn't really say that though, to be honest. We still have time for a true breakout again, like a true breakout. But once this thing breaks out again, ooh, it's time to get that money. On the daily though, it does say, hey, you know what? Before I give you that big breakout, I can give you a little breakout to make you think we might go to that big breakout, but I can at least give you a little breakout, which would be the bounce from the 93. Let's say 90. Let's just say it went all the way to 90. 90 to let's just say 104, 105. I'll take that. All right, thanks for listening. Tomorrow's Friday. Good luck with your trades tomorrow.